Ever wondered how a can of Monster Energy turned into a $60 billion empire? Today we're breaking down how this caffeine-packed brand crushed competitors, quietly outperformed Coca-Cola, and whether the stock is worth buying today. Today we will be looking at Monster Energy Drink. And just before we get into it, I just want to take a quick look at this chart comparing the stock prices of Monster and Coke. So here on a 1-year scale, it's just slightly outperforming, but they're both doing well. We look at 5 years, still pretty correlated. There's not a huge difference between the two. But if we look at all time, whoa! This is what really great earnings per share growth looks like. And I'm not saying Coke hasn't done well, but in Monster Energy's case, they really took the cake. Alright. Now, just a quick overview. Monster Energy is an American beverage company that manufactures energy drinks, mainly including Monster Energy, but they also own Relentless, Reign, and Burn. The company was originally founded as Hanson's in 1935 in Southern California, originally selling juice products. The company renamed itself as Monster Beverage in 2012. As of 2020, Monster held 39% of the $86 billion global energy drink market, the second highest after Red Bull. And Red Bull is a private company, so we don't really have access to their numbers, but we can see just under 5% revenue growth. You can see year over year, revenue continues to increase. The last few years have been all very good, and it slows down slightly, but also net profitability has increased with a slight decrease this last year. Going over to the trading view, we can see it's trading for quite a premium, 40 price to sales. But what I do like is that they own 29% of the outstanding shares. Scrolling on down, we can see 7 price to sales ratio, just under 8. This is quite a premium. It's not horrible, but still quite a premium. Historically, it is coming down, but again, still trading at quite a premium. Looking at their net margin, has also come down quite a bit, but still 20% net margin is not bad at all. We can see their revenue breakdown, of course, mostly being Monster Energy drinks, as well as their smaller brands, and as well as they started an alcohol brand. We can look at their balance sheet. You can see very low debt and a lot of cash, which is a very great sign. We can even see annually they like to run with a little bit of debt and a lot of cash, which is fantastic to see. Looking over at statistics, we can see here total common shares outstanding decreasing slowly over time, and that in turn increases the earnings per share. Again, we talked about price for earnings trading at quite a premium, as well as price to sales is lower than usual, but still we want it anywhere between 2 to 7. So this is a little on the high end still. Price to book, it is still very expensive, but if we scroll on down, we can see why. Return on invested capital was higher before, but still 20%. Pretty consistently is not too bad at all. Look at gross profit for a beverage company, 56% is really good. Also operating margin, 30%, very good. Maybe a little bit higher, maybe a little bit lower, depending on the year. And as we pointed out before, net margin, still very good at over 20%. Slight decrease 1 year, but still pretty consistent. Is Monster Energy still a buy today? Well, it's definitely a company I would keep my eye on, but it's trading for a very rich valuation. But growth, as we looked before, is still very strong. The downside, of course, is the valuation. You're paying up for the consistency and the brand powers, but very few companies, especially in the beverage industry, have that kind of moat. Monster Energy is a rare stock with high margins, high growth, high brand loyalty. Are you adding Monster Energy to your watch list, or is the stock too pricey? Let me know in the comments. Subscribe to Quiet Compounder for more breakdowns like this. Thank you, and have a great day.